crypto innovation in the United States or digital asset innovation in the United States. We're hearing all kinds of stories of people being attracted back to our shores, having moved abroad and not even wanting to deal with U.S. investors for fear that the SEC might come after them.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Cathie Wood explains the U.S. dollar index VDXY and the federal budget deficit as a percent of nominal GDP, revealing economic insights. Let's watch her to explore further.
This administration is celebrating, actually, literally today, Friday, Employment Friday, is celebrating the digital asset revolution with leaders from the digital asset movement at the White House. So that's exciting. And the Federal Trade Commission is the other form of deregulation. M&A was really prohibited by and large by the last administration. So many smaller companies who had perhaps negative cash flow had no source of strategic price discovery. How valuable are the new technologies they're inventing and evolving? The larger companies will bid for new technologies if they are allowed to. And in the case of healthcare, even more so, because that industry is facing a $200 billion patent cliff, meaning $200 billion, no, it's $300 billion of revenue falling off the patent cliff between now and 2030. And yet they weren't really allowed to do much in the way of M&A. And our companies, the companies who are creating all of these technologies and new ways, profound ways of doing things, were left adrift because no strategic price discovery. That is already starting to change. The other thing in terms of deregulation, the president has said for any regulation anyone wants to put in the federal government, 10 regulations will have to come off the books. In his first term, that was for every one, 2 had to come off the books. So he's doubling, tripling, quintupling down on that.
The crypto market is facing a sharp downturn as investor sentiment turns cautious amid a mix of factors. The overall market capitalization of digital assets has been dragged down by concerns over policy and investment flows, erasing gains from recent pro-crypto announcements. Recent remarks by President Trump have unsettled the market by warning that his policies may inflict short-term economic pain. His comments, which include plans for tariffs and budget adjustments, have cast doubt on the stability of crypto-friendly initiatives. Investors have also been reacting to a wave of outflows from crypto investment products. Data shows that significant funds are leaving these products, contributing to a risk-off sentiment among market participants. The sharp liquidations in the derivatives market have compounded the pressure, with long positions being hit hard and triggering automatic sell-offs. This selling pressure has increased supply, pushing prices down further. Technical factors are adding to the gloomy picture. The market is now approaching a key support level defined by a descending triangle pattern, a formation that typically signals continued bearish momentum. Bitcoin, Ethereum, and other top cryptocurrencies have all seen notable declines in recent trading sessions. As the market grapples with these challenges, extreme fear is evident, with sentiment indexes reaching levels not seen in recent times. In this environment, the combination of policy uncertainty, investment outflows, and technical weaknesses is fueling a pronounced market downturn. Analysts caution that if these trends persist, the overall market could face further declines, emphasizing the need for careful investment strategies.
By something around 1% from the third quarter to the fourth quarter. And we believe that fears about employment that I just described from such a huge swath of the employment base out there is probably going to cause a continued drop in velocity sequentially, which will turn into a year-over-year drop. So if money supply growth were to stay at 3.9% and velocity were to drop 1% on a year-over-year basis, then that would be a nominal GDP growth. This is mathematical. A nominal GDP growth of only 2.9%. And that would be either squeezing inflation out, squeezing real growth out, probably both. And so it didn't surprise us that the Atlanta Fed is now suggesting a decline of 3% quarter to quarter in real GDP. Now, some of that is a function of the massive increase in imports in the first quarter. In January alone, month over month, imports went up, I think, 12%. So on an annualized basis, that'd be the equivalent of well over 100%. So that's a real drag. Imports subtract from GDP. Now, the other side of imports, as they work their way through, is they either end up in inventories or they're consumed. So, we will see the other side of that import growth in the next few months. So let's see, we'll take you on now to, again, you can see the consumer was beginning to feel a little better about things, punctuated by, the election-related peak. And now it's unraveling a bit. And uncertainty, which is another metric in this index, is back near a record high. And that's understandable. There are a lot of moving parts as this administration takes over and owns its policies. And we also know President Trump, the art of negotiation, sometimes you need chaos to bring more and more people to the table. And that certainly seems to be working geopolitically. Another reason people are upset is, egg prices, bird flu, that's capturing a lot of attention, of course. But other prices have gone up in here. For a time, gasoline was going up. And this was the result, a backup in inflation expectations. The Fed really doesn't like to see this.
Ethereum, the world's second largest cryptocurrency, is experiencing a crucial moment as signs emerge that it might be nearing a price bottom. The native token, Ethereum, recently recorded its lowest weekly close since November 2023, trading around $2,084. This dip reflects a prolonged period of struggle over recent months, leaving many investors cautious yet hopeful for a turnaround. Notably, there has been an impressive outflow of $1.8 billion in Ethereum from exchanges over the past week, the largest such move since December 2022. This significant exit of funds suggests that many holders consider the current low price as a strategic opportunity to buy. In fact, on-chain data reveals that Ethereum's net flows have fallen to levels last observed at the end of 2022. Additionally, the MVRV ratio, which compares market price to the average price at which all Ethereum was last moved, has dropped to 0.8, signaling a potential undervaluation similar to previous bottoms. Technical indicators add further intrigue. A diamond pattern in Ethereum's recent price action hints at a bullish reversal, with some projections suggesting a possible rebound of about 20%, potentially taking Ethereum to roughly $2,600. However, the weekly chart shows that Ethereum closed below its 200-day exponential moving average for the first time since October 2023, a critical level that must be reclaimed to confirm a true bottom. Investors will be closely watching the upcoming days to see if Ethereum can rally above this key trend line and spark a renewed recovery. Overall, market sentiment remains very cautiously optimistic. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.